This is your technical update from the LMAX Exchange Research and Analytics Desk for Tuesday, March 3rd, 2015. Euro dollar. So while the euro has recently broken down below recent range support at 12.65 to put the pressure back on the recent 10.98 11-year low from January 26, there's no reason to get overly bearish at current levels, with weekly technical studies still well overextended and potentially warning of a more significant bounce. So for now, the market, while it is locked within a broader underlying downtrend, is going to need to break and close below 10.98 to open the door for that next downside extension. Until then, there is risk for additional consolidation or a bounce before the market decides to head lower. Ultimately, though, only back above 1535, that high that we saw on the 3rd of February, would give reason for pause with this bearish outlook. Sterling dollar. So while cable has been relatively well bid in recent sessions, trading all the way back up to the 155.50 area, the market has stalled out last week, putting in a bearish outside day formation, suggesting that we could be poised for a bearish resumption, a lower top and a bearish resumption back towards the 2015 49.50 low. However, a break back above 55.55 would suggest that the market is poised for additional corrective action and could keep this current correction going for further upside. Dollar yen. So dollar yen continues to consolidate within a well-defined range between 121.85, the December 7-year high, and 115.55. But within this range, we're starting to see a bit of demand as the market breaks back above 120 in recent trade. Clearly, a break back above recent highs at 120.47 would be required to keep the pressure on the top side and open the door for that retest of the 121.85 7-year high. A break above 121.85 would open the next measured move upside extension towards the 125 area. At this point, only back below the 117 area would give reason for pause. Euro Swiss. So Euro Swiss has been relatively well bid in recent trade, with the market trading all the way back up above 108 ahead of this latest minor correction. There is risk for additional pullbacks before the market heads higher towards the 110 psychological barrier, but only back below 104.15 would negate the current recovery outlook. Aussie dollar. So Aussie has been consolidating over the past several sessions. The market had looked in the previous week like it wanted to break higher after taking out some 78.75 range resistance, but the market did stall at ahead of just over 79 ahead of the latest pullback. So at the moment, we're going to need to see a break back above 79.13 or below 76.25, that recent multi-year low, to confirm the next measured move or the next extension, whether it be to the top side or the downside. So right now it's a wait and see with Aussie dollar. Dollar CAD. Dollar CAD has been locked within a clear consolidation over the past several sessions, though the market has been is within a well-defined uptrend that favors additional gains beyond the recent 128 5-year high and towards the 2009 peak at 130.65. In the interim, setbacks should be supported by recent lows at 123.50. Kiwi dollar. So Kiwi had been rallying over the past several days, with the market finally reaching that critical previous support of just over 76 before stalling out. This resistance point does prove to be a strong resistance point, and the market could look to carve out a lower top somewhere ahead of or around 76 or just over 76 ahead of a bearish resumption back towards the recent 71.76 low. A break below the recent 24th of February 74.20 low would do a good job of confirming bearish continuation. SPX 500. So no signs of a let up just yet in the S&P 500, with the market still trading just off record highs at the 2120 area. For now, a break back below the recent low from Monday at 2102 would be required to open the door for the possibility of a reversal, while only below 2083 would really get things going to the downside. Until then, the pressure remains on the top side for a potential move up towards next psychological barriers at 2150. Gold. So while gold has seen some pullbacks in recent days, the market does look like it's still in the process of a more longer term or medium term recovery off the 2014 1130 low. Recent setbacks have now been well supported at 1190, and the market could be looking to carve out a fresh medium term higher low ahead of the next major upside extension back above 1308 and towards 1345. Only below 1190 on a daily close basis would delay and give reason for pause. That's all for now.